By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence, robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. One, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year, because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the, like, profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
Chart I saw from Bloomberg Intelligence's Eric Balchunas, if you look at the rate of change from money market funds, for example, Schwab is growing more than any other. So while the cost of funding is challenged with fewer deposits, they are seeing money flows into different products, and therefore they're getting a bit of a relief in the market today.
Yeah, well, and we also were hearing on the conference call the CFO saying of Schwab that they expect resumption of deposit growth in 2023. So in theory, that story on deposits supposed to get a little bit better. Shonali, from what we've parsed through so far, knowing we do have a long way to go and hearing from some of these regionals and others, does it seem like the worst of that deposit crisis, if you will, is over, things stabilizing?
The reason you would have to say no is because this movement into money market funds has really started happening since you saw rates started rising. So, for example, you take estimates over from JP Morgan and Apollo, and really it's about $900 billion of flows into money market funds, and therefore pressure at the deposit bases of a lot of these firms. Now, we've seen a massive crisis here with banks failing. The sense here is that even if one or two were to hit more hiccups, might not be a industry-wide dilemma, that perhaps the worst may be over as some of the situation has certainly stabilized.
Let's bring in Abigail on this. It looks like everything kind of zeroed out here just in the last little bit here. Little up, little down at this point, Abigail. Is the market just hungry for more earnings?
More earnings and probably just continued March treading water into the Federal Reserve's decision in early May. And it's interesting because, to your point, the S&P 500 is literally basically flat, down just ever so slightly. But beneath the surface, you have some massive movers, and it's not just State Street and Schwab to the downside. We also, to the upside, have M&T Bank. And earlier today in the pre-market, it was up 2%. Then in early trading, it was down a little bit. This as deposits are down, I believe, about 2% or so. In the recent quarter, but now investors are cheering the fact that they actually beat both earnings and revenues, or some growth there, and net interest income was also beat. So that stock now up 6.5%. So some really wild trading action. And relative to the percentage movers, those are some of the big ones to the upside and the downside. We also have Enphase Energy on some positive analyst comments, up about 7.2%. On the other hand, Moderna is down about 7.8%. If I change the Bloomberg Terminal move function to points as opposed to percentages, we also have an interesting diametric move, not quite diametric, but Microsoft up about 0.5%. It had been up more before. Alphabet down 2.9%. So if we get away from banks, this is really interesting because, of course, there's this report that Samsung may consider using Microsoft's Bing as its default search engine as opposed to Google. That could be about $3 billion in search engine revenue.
I'll tell you, after 60 Minutes last night, I do wonder what's on investors' minds when it comes to anything AI. Because the message from Google was slow your roll, Kaylee. We talked about that last hour. Absolutely remarkable stuff. The hallucination and the black box. If Sundar Pichai doesn't get it, we're not going to get it anytime soon.
It's mildly terrifying, and it of course raises the regulatory question here in the U.S., but we've already seen in China, for example, where they're trying to ramp this up, the Chinese authorities saying, hey, you got to test it, make sure this thing is accurate, you got to disclose when it's AI-driven content, trying to slow things down a bit. Abigail, I heard you say there on your point about M&T Bank, which did come in a little light on deposits, but is still getting a really nice reward, up 6.5%. I have to wonder, given how much pain we have seen in some of these bank stocks, if the bar is just extraordinarily low because they've fallen so far.
Yeah, that's a great point, Kaylee. For sure, I think that you could see some investors scooping up companies, banks, these regional banks that simply basically make numbers or beat them a little bit. And I think the other thing that's emerging, you and Shanali would certainly have more expertise on this than I do, but my sense is that while there's obviously turmoil to some degree for some of these regional banks, at this point it seems much more specific to certain banks, such as obviously Sun Valley Bank, where some interest rate risk was really not priced in. We also, of course, have First Republic, some big questions there. I know that before I went on vacation last week that they were slow to release their deposit numbers and the stock sank a lot. I believe that they report next Monday. That's probably going to be a key one. But I also think that this week, not only are some of those big banks that you were mentioning, Morgan Stanley, Goldman Sachs, and Bank of America reporting tomorrow, this week we have a slew of these other regional banks. So it's going to be interesting to see what the totality of the picture is. Is it just a couple of these banks that made bad bets, or is there going to be more? But today it seems okay.
And it's only Monday. Abigail, thank you. Shanali, thank you. As ever, we'll be picking through these banking earnings next few days, Kaylee, with a lot more to learn.
Yep, buckle up. We got more to go.
You said it, and we'll pass the baton to New York next. Say hi to Carol Master. This is Bloomberg. Make sure to subscribe to the Sound On podcast. If it's not part of your lineup already, make sure to make it happen. Apple, Spotify, wherever you get your podcasts, and listen anytime at Bloomberg.com.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Ernst & Young is eliminating roughly 3,000 jobs from its American workforce as it pivots to address shifts in demand and overcapacity in some sections of its business. Tesla has disclosed to regulators another fatal crash involving automated driver assist systems, bringing its total to 17 since June of 2021, when the government required car makers to begin submitting data on these accidents. Tesla shares, they're higher now by 0.3%. Merck will buy Prometheus Biosciences for about $10.8 billion. And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, Merck will bolster its research pipeline and strengthen its portfolio of autoimmune drugs. And this agreement to buy the biotech company, one of the largest pharma deals in recent history, comes as Merck's blockbuster cancer drug Keytruda faces a looming patent cliff. Under the deal, a Merck unit will acquire all outstanding shares of Prometheus at $200 each in cash. That is a 75%. And Merck has been on the hunt for deals that can protect it from revenue loss when Keytruda loses that patent protection later this decade. And to that point, Charlie, Prometheus has a promising portfolio attracting attention in the immunology sector.
And that's Denise Pellegrini. We've got shares of Prometheus up now by 69%. As for Merck, that stock down 0.4%, 114.82. Those are some of the company stories we're following this hour. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
So he's running again. What are you laughing at?
Because it's not Joe
from
Biden.
New York. Well, that's right. It's not Joe Biden. You thought that's where I was going. No, the headline, the New York Post. You like the way they wrote that? Lying New York rep George Santos announces re-election bid. It's really happening.
Apparently, and there's video to prove it.
Yeah, he's out there standing on the street. Very informal. You can even hear his cameraman here at the beginning. Listen. Go.
It's a beautiful day here in Washington, D.C. It's a great day to be an American. It's a great day to be a Republican. And it's a great day to announce re-election.
Hey, okay. And that's it. He just starts laughing, and that's the end of the video. Aren't you supposed to go to the home district to do that, though? You announce in Washington that you're running again.
Yeah, and it doesn't look like it was super highly choreographed.
It was not at all, actually. So much for the production values. Carol Masser's standing by to carry the baton on Bloomberg Business Week. You see this, Carol? He's running for re-election.
That? I mean, come on.
Well, he's got a couple scooters over there. Somebody's going to probably follow. Reporters rather, are always following the Republican. They like to run down the street after him.
God, I wish I was going to, I wish we had something on that story, but we're going to follow that. I know you guys are.
Hey, it just broke.
We're going to talk M&A. We're going to talk big pharma deals. We're going to talk about ag and feeding the world, kind of important things. And then we're going to talk about SpaceX scrubbing their mission. So
what a bummer,
you got
huh?
Santos,
I was all excited for it.
You and me both.
Yeah.
I love that stuff.
I know, for sure. Along with Jess Menton for the ride today, Carol Masser coming up next on Business Week. That seemed to go by pretty quick today. It is the fastest show in politics, after all.
Of course.
I'll meet you back here tomorrow.
Sounds good. See you then.
That's Kaylee Lines. I'm Joe Matthew. I will meet you back here on Sound On. Remember to subscribe to the podcast in the meantime, then you won't feel guilty if you're busy. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. It is Monday. It is April 17th, 2023. Not tax day, because that's actually tomorrow, but you don't understand why. Google it. Having said that, I'm Carol Masser. You know Tim is on leave, and lucky for us, Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton, is in the house. And Jess, we've got stocks a little lower, although actually we've got a bit of a mixed trade here, but it's kind of a meh trade, and that 2-year really bucking back up above 4% today.
And when you're seeing the moves in the 2-year, you're also seeing that reflected in the
equity market. So if you're looking at these subgroups in the S&P 500, real estate leading those gains, so really showing you that search for income still is on. You're looking at the decliners, communication services, so more of those growth-oriented companies. Carol.
All right, we're going to get into the trade in just a moment. Our simulcast with our TV colleagues, countdown to the close in just a moment. But kind of with markets and investors, it just feels like they're waiting to get through the bank earnings, to be quite honest. With that in mind, markets may not want to commit, but companies increasingly do when it comes to M&A. So we're going to tell you about today's big pharma deal and today's regional bank earnings. So kind of what is the scorecard on that? And then we're going to tell you about the interest-only loans to the Hampton set that seem to have been the colossal mistake that took down First Republic. It all ties together, Jess.
It does, and we're also going to have the founder and CEO of Bowery Farming on how they're rethinking refarm and how exactly when it comes to how they're going to refeed the world. Also, the gambler of Who Beat Roulette, and then also we have to get into SpaceX scrubbing the launch of its next-gen Starship rocket. So that's going to be another big thing, Carol.
Yeah, Irving Fain is somebody I recently caught up with. So in terms of rethinking food production, they are doing vertical farming, but he's also thinking about just more broadly sustainability and really how do we kind of kick up food production without harming the environment and the climate at the same time. All right, folks, lots to come, as we said, and as Charlie mentioned, stocks coming off their lows of this session. We've got a slight gain on the S&P 500, just call it not even 2 points. Dow Jones Industrial Average, really call it flat on a percentage basis, just up about 28. NASDAQ still in the red, but just barely down about 5 points. Time to head over to our TV colleagues. Our cross-platform coverage, countdown to the close, starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here in the trading session. Romaine Bostic alongside Scarlett Fu, joined right now by our colleagues Carol Massar and Jess Menton. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Happy Monday, Carol Massar. An interesting day here in the markets. Not so much in the equity space, but definitely in the yield space, where we're looking at a two-year yield back at 4.2%.
Yeah, and looking like it's pretty comfortable sitting there. So we're going to get into that in just a moment. Having said that, to the downside, the crypto space has been under pressure again. That as we saw Bitcoin go below 30,000. We'll bring up some numbers for you who are watching on YouTube and our streaming service, and of course on TV. So you've got Bitcoin down about 2.7%, 29,532 is the current trade. You also have players in that space on the equity side of things. Coinbase is down about 3.4%, MicroStrategy down almost 6%, and you've got Riot Platforms down about 5% off their lows of the session. But as we see Bitcoin pulling in just a hair there, Jess, you see the whole crypto space coming in as well.
Y'all, I'm going to show a chart that is a little bit controversial, but this is from Bloomberg Intelligence. I'm taking a look at their economic regime model. So when you look at this, it's implying that a U.S. recession may have started actually last summer, and it did hit a low in December. And really what that means is it is signaling that there could be continued weakness in the economy, but when it does hit a low, that usually bodes well for equities over the coming 3, 6, and 12 months, and with double-digit gains a year later. So when you're looking at that, potentially that could explain a little bit why we might see stocks holding up so far, but obviously it's going to remain to be seen, Romaine, especially as far as where the economy is headed from here.
Absolutely here, and I think as a lot of people try to suss out, where we go here, it gives you a sense here of why we've been so range-bound. 41.41 roughly on the S&P 500 right now, poking back into the green, but that's still relatively unchanged on the day. Similar story for the Dow and the NASDAQ, basically clinging to fractional gains on the day. The Russell 2000, though, that's your outperformer, though. That's largely being bid up on the back of bank stocks. The Russell up about 0.9%.
Yeah, the clear outperformer there as well. So looking at the sector performers today, you're looking at real estate investment trust leading the way, up 1.7%. In fact, all 30 members in that group are higher. Industrials, really led by airlines, are also moving up by 0.5%. And financials, thanks to those big bank earnings, are also levitating. On the downside, you've got communication services. Romaine, you talked about the NASDAQ being the underperformer here. Energy and healthcare all in the red.
I like levitating. That's a great way to explain it. Love it.
Well, let's take a look at kind of the tale of two cities that's going on in the financial space right now. State Street shares down about 11% here on the day, having one of its worst days going back to the onset of the pandemic in 2020. And this had a lot to do basically with those deposit flows and, to be more specific, those outflows here. A big custody bank here still struggling with the fallout that we saw from the big regional bank crisis that kicked off basically in early March, or at least came to our attention. Meanwhile, M&T Bank, one of the big super regionals, is doing well. They're up about 7% 1% here on the day on the back of its earnings. Earnings that actually seem to suggest that some of those worst case scenarios that everybody was looking for just really weren't there, that this was not the broad-based contagion that some people had thought here. Deposit rates holding up, but still some concern here about loan growth going forward. General Motors shares up about 1%. We did finally get clarity here on where you can apply those U.S. Tax breaks for new EV sales. Basically, if you're General Motors, Ford, or Tesla, if you're buying one of those vehicles from one of those companies, you're eligible, probably going to be eligible for a $7,500 tax break. If you're buying anything else, forget it. Those shares are getting bid here on the day. And keep an eye on Google, Alphabet. Those shares down 3% here on the day on the back of that report by the New York Times that Samsung may actually be willing to switch away from Google as its primary search engine to Microsoft Bing as its primary search engine here. Let's go back to the macro real quick here. And I thought, Jess, your chart that you had, I think, really underscored here some of the positioning that we've been seeing in the market. The latest CFTC data that we got on Friday that basically goes through the week, midweek here, showing that folks still remain actually relatively bullish on the dollar. But it's probably one of the only things out there that they're still bullish on.
Yeah, fascinating in terms of market perspective here. Quick, you were going to say something, Jess.
No, I mean, definitely when you're looking at the positioning, that really tells you everything, especially when we're looking at the latest flow data from Bank of America that showed you that investors were still yanking, especially technology stocks, right, in the latest week of data.
It's a defensive read across the board. And I mean, we talk about these day-to-day moves, but writ large, when you look at the positioning in any asset class, it still kind of screams defensive.
Yeah, it does scream defensive. Having said that, we're all trying to read the tea leaves, whether it's economic data points, whether it's the earnings reports that come out. You also have leaders continuing to weigh in on some of the big macro geopolitical that's going on and concerns that those changing relationships around the globe could have ultimately on global economic growth. So weighing on that is European Central Bank President Christine Lagarde. She was in New York earlier giving some comments and speech at the Council of Foreign Relations here in the Big Apple. Here's what she had to say.
As geopolitics lead to a fragmentation of the global economy into competing blocs, this calls for greater policy cohesion. Not compromising independence, but recognizing the interdependence between policies and how each can best achieve their objective if aligned with a strategic goal.
All right, so some comments and concerns about the fragmentation of the global economy. Of course, ECB President Christine Lagarde here in New York City. Scarlett.
Is that why traffic is so bad today?
Why?
Among other reasons.
Yeah, but I just, we're going to get caught in the minutia, as we should, because we're in earnings season. We've got economic data points. We've got another Fed meeting coming the way. But again, you continue to hear those big global leaders, Scarlett, talk about some of the changes that are going on that might impact us for years to come.
Right, but it's still very much wait and see. And until you actually get evidence of change, people are just kind of seeing how things play out. And what really strikes me is how market volatility has disappeared, it feels like. The VIX is now below 17, which is actually the lowest level since January of 2022, January 4th, which is the same day the S&P 500 made its record intraday high, which is really striking given the stresses that we saw not just a month ago.
I find that concerning, though, because I feel like that lack of volatility is actually kind of a sign of a lack of participants, really. I mean, you have so many people just kind of on the sidelines right now, not really knowing what's going to happen next. And I don't know. I mean, I don't know what the catalyst is because the Fed's kind of made it clear what they're doing. The market's just, for whatever reason, not believing them.
And we haven't had a ton of earnings obviously come through yet. I mean, just about 8% of market cap total for the S&P 500 companies. But Laura Calvasino over at RBC was pointing out that so far it seems like when we're analyzing the earnings call, it's less about inflation. She was arguing that we might see a peak in the discussion in the transcripts when it comes to recession talk as well as layoffs. But obviously we have so many companies. Another 10% of S&P 500 companies are going to report this week. So obviously we have to get toward all of that to see if those themes still hold up or not.
But to that point, I mean, you saw the Empire manufacturing data. There's some industry data coming out on trucking rates and other things. So there is a normalization afoot here already.
B of A saying the tough earnings season off to the best start in a decade. So I don't know. Where do we go from here?
Early days, remember, early days.
Exactly. Lots more to go. Hey, guys, we're going to be back in less than an hour's time. Our cross-platform coverage on radio, TV, YouTube, and, of course, Bloomberg Originals Beyond the Bell. Join us at 4 p.m. Wall Street time.
Gotta give me some dollars and cents, Them greenback bills with the pictures of the presidents.
All right, folks, you've got your market setup on this Monday, thanks to the gang. In the meantime, we want to dig a little bit deeper into the bank sec, because this is something that's certainly on our radar, and it's not just about the big banks, as it typically is in earnings season. It's really a lot more about the regionals, and we heard from a few. We did on Friday, PNC, M&T Bank today rallying after an EPS and net interest income beat, but State Street, the custody bank, plunging the most in 3 years, clients retreating from its investment products, said the outflows probably aren't over. So what to do? What to do? Is there a conclusion here? So let's see what Bloomberg Intelligence senior analyst for U.S. regional banks, Herman Chan, he has been so busy over the last month or so. He's back in our Bloomberg Interactive Brokers studio. All right, Herman, early on, we still have more to come, right?
That's
when
right.
it comes to the regional banks. What we've seen so far, is there a theme? Is there a story?
Yeah, the theme is generally that the largest regional banks that have reported so far, PNC, M&T, you wouldn't really know that there was banking turmoil in March. The results were really strong. For M&T in particular, the guidance showed that the franchise really has been really undisturbed by the failures of SVB and Signature, and showed really good guidance in terms of both loan growth and the trajectory of future rising deposit costs, which were pretty much in line with what they expected a quarter ago. So all in all, really good numbers and a good showing.
Now, we obviously aren't going to hear from First Republic until next week, as well as PacWest. Those are the names that typically come up when we do have concerns. But we're going to have Fifth Third, U.S. Bank this week, as well as KeyCorp. What do you expect to hear from these banks later this week ahead of those other big names?
Sure. I think you could see a continued focus on deposits and the ability to retain deposits. That's been the key theme throughout this earnings season so far. Which banks are keeping deposits maybe a bit better than others. You saw JP Morgan's blowout deposit number last week, and PNC showed stable deposits, which is probably, I was speaking to some other folks earlier in the day, flat is the new up for deposits for the regional bank. So any bank that can...
I tweeted that out because it was just classic.
That's great.
I loved it.
So we're looking for that. PNC probably hit the high water mark in terms of keeping their deposits stable. So we'd probably see some attrition from the others.
So is it just a case at this point that it's First Republic and Western Alliance that really you're keeping on your radar where things are going to be a little bit tricky?
Yeah, I think so. The other banks that we're looking at, Comerica, Key, Zions could see a bit more deposit outflow, but nothing that would be out of the ordinary.
If we did, that would be...
If we did, then that could be a surprise. And we still really don't know from bank to bank, right? So we know from an industry standpoint that a lot of the liquidity and funding issues have really abated, but from bank to bank, it could be a different story. So we're still working a bit in the dark, and we'll get more clarity by the end of the week.
When it comes to State Street in particular, it did come under a lot of pressure just because clients were retreating from those investment products. Are you seeing a similar theme across other regional banks like that?
Yeah, it hasn't been that much of a story. I think that issue with State Street is a bit more idiosyncratic with the deposit products and their margin peaking maybe a bit faster than others had expected. Overall, the banks really, it's about keeping your deposits in place, growing your loan book, and keeping your credit quality pretty stable. For M&T, for example, the big issue heading into the quarter was some concerns on office commercial real estate, which has been an issue after the SVB and Signature failures, and they had some pretty constructive comments about this is more of an elongated event, so it's going to take a couple of years for it all to play out, and they'll manage it.
The Bloomberg Big Take, Herman, on the terminal today is a story about the interest-only mortgage loans that were tapped by a lot of wealthy U.S. home buyers,
right.
And they were issued by First Republic, which also, shows why maybe everybody's like, I don't really want to buy this puppy because of kind of the exposure, especially since rates have gone up. So could First Republic, is there some kind of positive ending for this bank?
It remains to be seen. I think if the positive ending we would hope for is that the deposit outflows really stabilize at the end of the month and the end of the quarter, and they can sort of manage and muddle their way through, sort of have this balance sheet that's focused more on these interest-only type, lower yielding mortgages sort of just play itself out and mature over time, and they'll just run off the balance sheet. That's the best case scenario at this point.
All right, so we want to get a little bit more on this story. We're going to say thank you to Herman Chan. Thank you, as always, for really some clarity and just guidance in terms of what's going on in that regional space. He is our senior analyst for U.S. regional banks at Bloomberg Intelligence, joining us once again in our Interactive Broker studio. We just mentioned that Big Take story. It is one of the most read on the Bloomberg. It is about those interest-only mortgage loans that are tapped into by wealthy U.S. home buyers. That is, excuse me. They're financing homes in the Hamptons and a few other rich enclaves. So let's get to that story. It's a Bloomberg exclusive. Bloomberg News finance reporter Noah Buhire with us on Zoom from Seattle. Those mortgages all issued by one now very troubled bank. We just talked about it with Herman. We're talking about First Republic. Give us more color on this story.
Yeah, so what we wanted to do is take a look, a deeper look at the actual product that has been causing so much balance sheet stress at First Republic. And as we dug into the data and their securities filings, we saw that over the last couple of years, their very deliberate strategy to woo wealthy clients involved a ton of mortgage lending. And what they did was go out there and provide a mortgage product to wealthy individuals. These were high net worth people, great credit scores, and they would offer them mortgages at rock bottom rates with an added feature. They could get interest-only payments for the first decade. And the reason that's been such a problem for First Republic is that as the Fed has raised interest rates to tamp down inflation, these loans that are sitting on First Republic's books have lost a lot of their market value. Now, they're performing loans. These are high credit quality loans and mortgages, but the problem is now First Republic is financing itself with more expensive money, and they have all these assets on their books that are yielding less.
I have to ask, what do you think could be the broader risks here with this type of situation? That, I mean, is this only exclusive to First Republic, or could this end up having rippling effects to other regional banks as well?
Well, I think this was a deliberate strategy of First Republic to go after these kind of clients. But when you talk about broader risks, what's interesting about First Republic is the exposure of big banks. I mean, last month, JP Morgan, Bank of America, and 9 other big banks agreed to deposit $30 billion into the bank. So First Republic is now attached in certain ways to some of the biggest financial institutions in our country.
I gotta say, what I love within your story too, and it kind of harkens back to the great financial crisis, Noah, this whole idea of, this was a strategy, as you said, that First Republic put out there, and now it creates incredible exposure for them, right? And has really brought them down, if you will. And then you've got the big banks who helped them out, and then now if the government wants to help them out even more, it's just such a bad political headline, if you will. The banks, once again, helping out a bank that helped the really rich.
Yeah, I mean, look, in many ways, it's the antithesis of what we saw in terms of interest-only loans during the 2008 financial crisis, or the loans that were made in the years before then. I mean, in those cases, interest-only loans were often made to less creditworthy borrowers,
right,
and who had troubles when the balloon payments hit and the mortgages stopped performing. One of the interesting things about First Republic's loan book is just how well these loans have performed. They're at extremely low interest rates, which means they've lost their market value and created balance sheet problems at First Republic. But we're not talking about a credit quality issue right now.
Mm-hmm. So is that the good side? And then the bad side is just how many are on their books? Because I think about what's the next step for First Republic. Is a buyer going to want to come in and be part of this?
Yeah, and that's, I think, one of the interesting dynamics here. It's it's an earnings issue for First Republic right now.
Mm-hmm.
They're borrowing at a higher rate than some of their assets are paying out at. So that's an earnings issue. But they're allowed to carry these assets, these loans on their books at the higher values right now. The problem is, in some circumstances, if they were to sell themselves, the buyer might have to mark down these assets to fair value, which would create just an enormous hole on the balance sheet.
And I got to say, I love that you also include, that this was an open secret that the San Francisco-based lender was offering particularly attractive terms on mortgages among Wall Streeters, so it was pretty well known. Great read, and it is the Bloomberg Big Take. Noah Buhire, thank you so much, so appreciate it. Bloomberg News finance reporter on Zoom from Seattle. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all in the green right now. Meanwhile, the possibility of further Federal Reserve policy tightening is lifting Treasury yields. Investors staying on the sidelines amid bank earnings. S&P up 7 right now, a gain of 0.2%. Dow Industrials up 66, higher by 0.2%. NASDAQ up 18. That is a gain of just about 0.2% as well. 10-year yield 3.59% with the 2-year, 4.18%. Spot gold $19.96 the ounce, and West Texas Intermediate crude down $1.50 a barrel. WTI 81.01 down now by 1.8%. Are we seeing stabilization in the bank banking industry after March's turmoil. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
It certainly seems that way because we've even seen deposits stabilize for the smaller banks in the last week. So we saw deposits tick up just slightly. We've also seen loan growth tick up just slightly. So at this point, it looks like the issues are contained. However, we still have to watch credit growth really, really closely. That is the thing that could tip us into a recession if it were to slow meaningfully.
Bank earnings this morning, we heard from State Street. That stock now down 10.7%. Schwab shares up 2.4%. Bank of America reports tomorrow. Bank of America up by 2.7%. Again, recapping, stocks higher. The Dow, the S&P, NASDAQ up by 0.2%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Carol Master along with Jess Menton here on this Monday. So global M&A activity is gearing up for a spring renaissance with more than 20 billion of potential transactions emerging since the weekend. The latest charge being led by Merck, which agreed yesterday to buy Prometheus Biosciences for about 10.8 billion, works out to about 200 in cash, continuing a theme of large biotechs looking for ways to boost pipelines and portfolios of new drugs. It's an old story. We've seen this before. It is also the latest boost for deal makers in healthcare, which is one of the few sectors, Jess, that's defied the global slump in M&A. We are seeing activity here.
And with more on that, we do have Sam Fazeli, who's a senior pharmaceutical analyst at Bloomberg Intelligence on Zoom from London. And Sam, I'm looking at shares of Prometheus Biosciences. That's ticker symbol RXDX. It's up about 70% on pace for its best day since early December. Break down this deal for us.
Yeah, hi. So basically what we've got is Merck is going after a drug that has shown, which is the key asset that Prometheus has, that has shown very good efficacy, accepting that its cross-trial comparisons are either not being compared head-to-head. It seems to be the best efficacy that we've seen so far in treating inflammatory bowel disease. And that's a big market. J&J alone has a drug called Stelara, where, of course, it's used in other indications too, and that could be the same for Prometheus's drug, is doing close to $10 billion expectation this year. So, you know, then when you put that into context, $10.8 billion doesn't sound like a lot, at least from this basic assessment. But of course, commercial dynamics could be very different when this drug comes to market in 2026.
Yeah, I was just going to say, right, that's a few years from now, and you know better than most, Sam, about the, drug trial process. There could be some stumbling blocks. So, but you would assume that Merck has done its homework in a big way here.
Sure, but this is an early stage trial. When you go into larger phase 3 trials, different kinds of things can surface, but I'm not necessarily worried about side effects. I mean, that is a risk that drug companies take day in, day out, or the efficacy doesn't pan out as well as it did in a smaller trial. What I think is interesting, going to be interesting, is that the same drug that I mentioned earlier, Johnson & Johnson's drug, Stelara, is going off patent imminently. So this is this peak year, and in 2024, it's going to be going losing market share to biosimilar drugs, which will be cheaper. So when Merck comes to market with this drug, where will it be positioned? Will people be forced to use Stelara first, and if they fail, then they use Prometheus drug, which would then take longer to ramp up sales?
Sam, I know Merck is really focused when it comes to oncology, but I know its key drug, Keytruda, it's estimated to bring in around 43% of its revenues by the end of 2024. Now, as far as when the expiration is concerned, it's still a while there, but is this really a key play as far as the patent front, as far as what it can do to still boost those revenues once that patent does expire?
Yeah, so the patent expires in 2028. And we don't think that they're going to be able to push that much further. Of course, it doesn't expire everywhere at the same time, so it's going to be relatively speaking, at that point, expectations are about $33 billion of sales, but we think that it could lose about 17 over the next 2 years, and that's what consensus has in their expectations. So will you be able to replace 17 billion? That's a big ask. There are other drugs in this pipeline that are looking really good from previous acquisitions, and this will help, but we don't think that it's going to be quite enough to make up that difference, that therefore they'll need more deals, or at least more drugs coming out of their own pipeline.
Hey, Sam, I mean, we've seen this movie before, right? You know, the big pharmaceutical companies have drugs coming off patent, and then they got to figure out how to beef up their patent pipeline. I mean, is that what is, at this point, once again, driving the acquisition mode, if you will, among the big drug companies?
Yes, it is exactly that. You know, we've got estimates of over $300 billion worth of drugs exposed to patent expiry by 2030. Now, that doesn't mean that's the sales that lose, but that's a big number. Over some period of time post 2030, they will lose some of those sales to competition. So they're going to have to be able to replace that. Some people will do a better job of replacing than others. Time will tell, but they certainly need this, and there's going to be more M&A to get through this.
I am also curious, Sam, that like kind of what's on everybody's radar. We talked to various folks in the medical community and just in the innovative space and disruptive space, and they talk about the human genome and, you know, personalized, individualized drugs. And I'm thinking also we're coming off the pandemic, and I'm thinking about what we might need next. And messenger RNA, right, that led to the development of those drugs. What are some of the things that are on your radar that you think are probably on the radar of, you know, a Merck or a Pfizer and others out there?
Yeah, I mean, there's so much going on in science. Prometheus is an example of that. This is a completely new target being developed for this inflammatory disease, which has seen quite a lot of innovation. There are patients with psoriasis, which is pretty bad disorder, that see 100% disease remission or skin clearance with some of these newer drugs. So immunology is exploding. Our understanding of immunology is exploding, which frankly touches every disease that there is. And so the more in-depth understanding of immunology we'll have, the better we'll be able to target some of these diseases. At the same time, the modalities that we can do it with are expanding. Protein degraders, things that can downregulate the amount of a protein that's produced, even if it's not a standard way of doing pharmacology. So there's that element. There's the mRNA vaccines. There are the gene editing technologies, all targeted at trying to solve single gene diseases or targeting immune system disorders, which, as I said, is involved in pretty much every disease that there is.
And Sam, I was curious about what you think this says about the macro and the economy as far as a sign of confidence if you have these C-suite executives that want to put more money to work, and particularly, obviously, when we're talking about the pharmaceutical industry.
Yeah, I mean, look, at the end of the day, when you have that drug that's become such a success, not just for your P&L, but also for patients, and I'm talking about Keytruda here as an example, you need to do something. You can't just sit back. And let's not forget, pharmaceutical companies are not impacted by the macro environment as much as consumer stocks or tech or etc. They are less sensitive to interest rate rises because they're very highly cash generative. So they're in a position to exercise this power. And thank God, because at the end of the day, we do need the drugs that they're bringing to market, and they are making a difference, putting the pricing discussion aside, because that's a whole different kettle of fish.
Yeah, it's pretty remarkable, though. You think about what Pfizer, was it last month, bought Seagen for $43 billion. I mean, there's so much going on in the space. Hey, any thoughts, if you will, Sam, on Prometheus? It's trading below 200. We know that 200 in cash was what Merck put out for it. Does that mean anything significantly to you? Just quickly.
Not really. I mean, if you look at Merck's current areas of activity in this disease area, I don't really think there's much competition. The drug is early stage, is high risk. I think this is just 6 months of waiting for it to close, or a few months of waiting for it to close, and that gap will likely close. Well, so I don't read too much into this.
Okay, well, good to get some perspective, and fun to have kind of another M&A Monday, which we don't always have, or it feels like we haven't in a while. Hey, Sam, thank you so much. I know it's a little bit later out there in London, so appreciate you hanging around so we could talk with you. Sam Fazeli, he's Bloomberg Intelligence Senior Pharmaceutical Analyst, as we said, joining us via Zoom from London. Check out Bloomberg.com for some of the additional research by Sam and the team, and some of the other reporting when it comes to this acquisition. But it is typically, about the pipeline, Jess. That's what it's about for these big pharmaceutical companies. if you know, covering business news a lot, you see these cycles that go through for these companies that have these blockbusters that bring in so much money, and then they go off patent. And then they've got to think about, okay, what brings in revenues from here on
and
out?
when you think about how much cash these companies were sitting on in the pandemic, Carol, and then wondering, what do we do with the money? Well, particularly with the pharmaceutical giants, maybe more M&A.
Yeah, exactly. And we've seen a fair amount already this year. All right, you are listening and watching Bloomberg Business Week. Let's get an update on world and national news. Off to D.C. we go, our 99.1 Newsroom, and Nancy Lyons. Hey, Nance.
Hey, Carol. House Speaker Kevin McCarthy says there will be a vote in the coming weeks on raising the debt ceiling, but not without new spending cuts. He spoke today at the New York Stock Exchange.
Now, unlike President Biden, I don't dismiss Americans' fear about higher prices. I share them. And I share their conviction that we must change course before it's too late.
Speaker McCarthy says defaulting on our debt is not an option. President Biden is insisting he wants a clean debt bill with no strings attached. U.S. Attorney General Merrick Garland says the U.S. will hold Russia accountable for a long list of war crimes against Ukraine. Garland spoke today after meeting with Ukraine's Prosecutor General.
We will do everything we can to help Ukraine achieve justice for its people, and we will work for as long as it takes to hold accountable under law those who bear responsibility for the Russian regime's brutal crimes.
Garland says the U.S. will send an experienced prosecutor to The Hague to help in the international investigation. The U.S. ambassador to Russia visited detained Wall Street Journal reporter Evan Gershkovich in a Russian prison today. Envoy Lynn Tracy says the reporter appears to be in good health. He was detained nearly 3 weeks ago on charges of espionage. And it was a sweep by Kenyans today in the Boston Marathon.
A cold and rainy running of the Boston Marathon and a major upset as world record holder Eliud Kipchoge failed to make the top three. The race instead going to defending champion Evans Chebet with a time of 2:05:54. And it was a packed women's field, including a tumble until the very final mile, with Helen Obiri emerging victorious. At the Boston Marathon finish line, I'm Janet Wu.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the developing story. Sources tell Bloomberg Taiwan's going to buy as many as 400 land-launched Harpoon missiles intended to repel a potential Chinese invasion, completing a deal that Congress approved back in 2020. Now, let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a recent bid in a very choppy session. The Dow is currently up 46 points. S&P's gained 6, and NASDAQ is higher by 18. The U.S. 10-year yield at 3.59%. Gold is down 8, oil trading in the red, and Bitcoin is down by 2.6%. Of the main 11 S&P sectors, leaders were real estate and the financials. Energy and telecom were under pressure. And leaders to the upside in the Dow, Boeing and Walgreens, while UNH led to the downside. After earnings, State Street plunged 10.6%. Schwab climbed 2.6%. And in deal news, Danaher is set to shelve its takeover pursuit of Catalent. In other news, Roblox plunged 12% after reporting March metrics. And wrapping things up, trucker J.B. Hunt reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over you, Bloomberg, type squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just got about 18 minutes left in today's trading session. We've got stocks, we're in the green, so we're off our worst levels of the session, as you just heard from Charlie, but just call it little changed on the day. We really are just getting into the thick of earnings and trying to make sense and just on guard about any other problems in the banking sector. So, I mean, Jess, volume, what's the volume like today?
I mean, still, it's not as high as you would think relative to the last 20 days. And I think a lot of that is just the same things we've been talking about, Carol, waiting on those more regional banks, like say on Thursday, we're going to get the third Key Corp as well, U.S. Bank. So I think that's really more of the focus later on this week.
All right, so let's get to it with our guest. Back with us is Doug Sioka, CEO and partner at Kavar Capital Partners. They've got over $1 billion in assets under management, based, as you know, in Leawood, Kansas. And joining us on the phone once again, actually via Zoom. Hey, we can see you. How are you?
Hey, I'm great. How are you?
Doing okay. Trying to keep up with the flow here and trying to make sense. You know, it's funny. I wanted to kind of kick it off with you, Doug, earlier with Romaine and Scarlett. The four of us were talking about, and Scarlett brought up what's going on with the VIX, and it's what, below 18, I think 17 and change. I don't quite get it. 1697. Do you care about the VIX? Do you think it's a reliable indicator of something? Because it just feels like we're in this market environment where we're not quite sure what's next, and yet there feels like a fair amount of complacency.
Yeah, we may have used a little bit of, maybe pulled forward some of this year's last year. Carol, I think last year there were 46 different trading days with 2% moves up or down. And actually it was 23 and 23 equally divided, which is pretty fantastic. And this year I think we've had 2. So I think we saw so much fitful trading, indecision, obviously credit exported equity volatility. And this year, even though we know that the Fed may have one more hike and maybe they won't cut as much as the market's been pricing in, I think there is a bit of complacency that's setting in. But I think more than anything, it's just that an exhaustion with the type of intraday trading activity that had become the norm throughout 2022.
Is it exhaustion, or is it signs of we're kind of finishing up or getting near the end of this market cycle?
Yeah, I think nothing's been as bad as had been anticipated going into 2023. Even when you throw in the issues that had transpired with the banking mini crisis, right? And I think when you saw what had transpired with this fear contagion, that very anxious weekend, we weren't sure what, if any, additional deposits were going to be covered by the FDIC or the Fed. And then it just kind of played itself out, and we realized that some of the additional liquidity could be a bit of a salve for otherwise deeper wounds that could have transpired, even though it may have been kind of the sword that caused the affliction to begin with.
Doug, let's talk about earnings seasons. We've gotten a number of these bigger banks as well as regional banks. Now, I know you're thinking more, this is obviously more backward looking, but if you look a year out, earnings growth is supposed to be back to double digits. What are you expecting? And is that why you might have a little bit more of an optimistic look when you are seeing earnings improving a year from now?
Yeah, it's a great question, Jess. And I think one of the things that's been so pronounced this year, and it's only been one quarter, but patience has been kind of the enemy of performance, right? The valuation gap going into 2023 between international and domestic closed very quickly. High-tech sector went from like incredible laggard to darling leader. The banking issues pulled forward the bulk of the bond move that we'd hope we'd see throughout all of 2023. So when you consider what's happening in earnings, we try to overlay this whole concept of a rolling recession, right? And that's just another way of characterizing, right, relative value of certain sectors based upon, a few things: correlation with interest rates, with underlying economic growth, and with sentiment. So when you're in an environment for which we think is going to be higher for longer interest rates, slowish economic growth, sectors that benefit from scale, from inelastic demand, from low leverage, from multinational distribution networks, those should hold investors' interest. And we're starting to see that as they're coming to kind of the earnings reporting table in healthcare, staples, communication services. And then even outside of those, within the rolling recession camp, you have idiosyncratic sort of tactical opportunities in sectors like energy and in sectors like agriculture, because even though supply lines have improved, supply hasn't. So we're seeing that an overestimation of just how negative the economic decline in 2022 is going to have an impact on their profit models, and it's just not materialized.
So is this a market where we can kind of make smart decisions, Doug, based on fundamentals versus kind of a technical trade?
I think so, right? It's probably overused expression on every program about being a stock picker's market. But I do think, right, if you look at the last 3 years, what's underperformed? Quality. Right, quality companies have been left behind. What's underperforming more than quality, sort of a subcategory? Dividend-paying stocks. So if you have those two subsets that are providing comfort in balance sheet, income statement, and valuations, then yeah, I do think there can be specific spots where you can actually see identifiable alpha-generating opportunity, no question.
Doug, you're talking about quality companies and dividend-paying stocks. What specific sectors or sub-industries are you recommending clients buy right now?
Yeah, so going back to healthcare, staples, communication services, definitely dipping our toe into some financial services companies where we think just the valuation were just blown out way beyond anything that could have been deserved because of the expected contagion with Silicon Valley Bank and Signature Bank. And then even like in places like agriculture, we think there's a lot of opportunity.
Yeah, no, it's interesting. We've been spending a lot of time here, Doug, talking about kind of agriculture, what's going on, disruption, innovation. We're going to have somebody on from Bowery Farming later, but just there's a lot going on in that space as the world tries to make sure there's enough food for everybody. Where don't you want to be in this market?
Yeah, it's a good question. I think we were excited about extending duration in our fixed income portfolios, and then with the massive rally we saw coming out of that second week in March, issues with the financial, with the banking sector, that was kind of arbitraged away. So we don't want to be too long in our duration right now in our fixed income portfolios. We don't want to be too aggressive in growth sectors of the market because we just don't think there's going to be any type of multiple expansion, not when you have a slower growing economy and higher interest rates. So even though it's been exciting to see what's happened in tech, I think it could provide an opportunity to take some profits in that area, particularly if you're in a sector or a company that's seeing a pretty significant expansion of their multiple.
All right, so more optimistic or more pessimistic, bottom line, about the outlook? Sounds like optimistic.
Optimistic. Oh my gosh, but by a lot, right? Yeah. I think there were some interesting lessons we learned from the Fed coming out of this little banking crisis, right? You can't live in the lab. And I think regulators are really good at implementing policies to prevent the previous crisis. And because of that, the messaging really, really matters. When it gets convoluted, and when you see sort of babies in bathwater indiscriminately sold and thrown out, that's where opportunity really, really lies very heavily with us. There's a really cool piece you guys probably saw over the weekend that came from Bloomberg Intelligence talking about this regime model.
Yeah.
And everyone's so obsessed about how we go into a recession, how deep the recession is going to be 23 or 24.
Right.
What they talk about with really reliable inputs is we may have been in one.
Yeah.
And we really have seen a lot of reasons for being optimistic, which has kept people engaged in stocks.
I love when you quote Bloomberg stories.
I wrote that story.
Oh, Jess wrote it. Doug Sioka. How great is that? All right, Doug, be well. Doug is CEO and partner at Kavar Capital Partners, joining us from Leawood, Kansas. This is Bloomberg. How cool is that?
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. 7 minutes to go ahead of the closing bell. Stock's best level of the day, but Boston-based State Street shares are selling off. They are sharply lower after the custody bank reported clients retreated from its investment products. State Street now down by 9.1%. Schwab shares, they are trading higher after this morning's earnings report. Right now, Schwab is up by just about 3.6%. Well, today we did hear from more financials as big banks continue to report earnings amid questions about whether the banking turmoil is behind us. Shonali Basak follows Wall Street banks for Bloomberg. And she says that right now, all depends on the size of the bank. Some of the other stories that we're following for you, Bank of America will be reporting earnings tomorrow morning. Bank of America shares ahead of that report. Right now, they are up by 3%. Sources tell Bloomberg Lululemon Athletica is exploring a sale of Mirror, that is the fitness equipment maker it acquired for $500 million in 2020. Those sources say Lululemon is working with an advisor to solicit interest in Mirror. Mirror's hardware sales have missed Lululemon's projections. Shares of Lululemon today, right now, they are trading a little changed. So again, ahead of the closing bell here, we have got the Dow, the S&P, NASDAQ. They're all advancing. S&P higher by 11, up by about 0.3% at 41.49. And those are some of the company stories that we're following for you at this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
Hi, everybody. We've got just under 5 minutes left in today's trading session. Carol Master along with Jess Metton. As you know, Tim is on leave. We're going to head over to our TV team. Scarlett and Romaine in just a moment, count you down to the close on this Monday. In the meantime, the most read story on the Bloomberg in the past 8 hours talks about ChatGPT can decode Fed speak and predict stock moves from headlines. And it just gets into a great story by Justina Lee of Bloomberg News, how the first wave of academic research applying ChatGPT to the world of finance, it's coming, it's arriving, it's getting here. And she writes that judging by early results, the hype of the past few months is justified. So there's 2 new papers out specifically that get into this, Jess.
And what fascinates me about this, not only that the Fed could potentially be trying to get into this, but when you're looking at it, the tech can decipher whether it's dovish or hawkish language, which everybody wants to know right now.
Oh my God, do you think you could get it right? And could you imagine like these debates that we have constantly with our TV colleagues? We wouldn't have to do it because it's like ChatGPT says, it's a dovish Fed.
Right, when we talk about how many mentions in the minutes or the beige book of what is coming up with inflation, here we go.
Well, and I think about it in terms of investing overall. Like if you could, I don't know, you could feed in a ton of annual reports or quarterly reports and like search on certain words, and maybe that's being done already. I mean, AI is so much a part of our world already, certainly part of the financial community, but this generative AI taking it to a whole other level potentially.
Taking it to a whole other level, especially like you're talking about with these earnings reports coming out and trying to dig in deeper beyond even just the inflation and recession fears we're talking about, that we'd be able to see what are these other big themes that are come out soon.
I love it too, right? This paper, this first paper. Did you say this? The title is Can ChatGPT Decipher Fed Speak? I mean, I think, gosh, you know, if we had it when Alan Greenspan was out there, because people used to be like, Alan Greenspan would talk and everyone would be like, what did he say? And then if you could just kind of feed it in and then spit out kind of the conclusion.
And there weren't those Q&A type segments like what really started with Fed Chair Ben Bernanke whenever he started it after the aftermath of the financial crisis, and now obviously we have Powell doing it after every press conference, but Greenspan, he didn't do that. So I feel like that would have been a lot more help in that day and age.
It's really fascinating, and like we said, it's the most read story on the Bloomberg in the past 8 hours, so this is what folks are checking out. I feel like we are all in on the next level AI, so it has certainly caught our attention. Hey, also catching our attention is that 2-year note with a yield of 4.18, pretty much holding just a little bit lower from the earlier trade, but still above it. And this on a day where we've got stocks at pretty much our best levels of the session. Time for Beyond the Bell, our cross-platform coverage.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. here to help take us beyond the bell. It's a global simulcast with Carol Massar and Jess Menton. Welcome to our audiences across all of our platforms, Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Near the highs of the day for most of the major equity indices here, Carol.
Yeah.
Though we should point out the trading range is tight, and we got a big earnings week ahead here, starting tomorrow morning.
Yeah, it's like we're taking a breath and holding it until we get those results. Having said that, on a day where we got some regionals, M&T, and we're thinking about the big bank sector, you've got the KBW Bank Index, certainly some outperformance. They're up 1.3%. And Jess, we've got most names in the index, 19 out of 22. They are all showing some gains today.
And also looking at the VIX right under 17, so still hovering at the lows for January of 2022, which obviously was right in the beginning before we got into the sell-off of last year. So again, where is the volatility? Clearly not there today.
Right. It makes you feel like there's just the calm before the storm, because there's still so much to come, right? There are some reports from Bank of America saying that the earnings that have been reported so far are doing really well, but it's early days yet, and the big banks we knew were only going to benefit from the regional banking crisis we saw.
I think it's interesting, though. You have so many sort of notes coming out. I mean, we were talking about Mike Wilson a little bit earlier, kind of sounding the alarm, if you will, on the idea that earnings season isn't going to be good. You had the strategists over at BlackRock, Wei Li over there, putting out a note saying that they expect this slump in profits to not only be material for the quarter we're about to get, but even pushing forward here, a bit of a contrarian call based on what we're seeing in other estimates, particularly with our own research folks down here at Bloomberg Intelligence. We do get the closing bells here in New York. You're seeing green pretty much across the screen. The Dow Jones Industrial Average higher by about 0.3%. The S&P 500 also higher by a similar amount. Looks like its close is going to be right around that 4150 mark. And the NASDAQ Composite higher by about 34 points, or about 0.3% here as well. And we talk about how it was kind of a flattish to down open for most of these indices. We should point out the Russell 2000 did open strongly on the day, and it finished strongly on the day, up by about 1.2% to close out the day. Of course, a big weighting there with regards to healthcare, real estate, and of course, banks.
All right, Romaine, drilling down just a little bit more. Let's get into the S&P 500. Most names in that average higher today as we finish at pretty much our best levels of the S&P 500 today. You've got 378 higher, Scarlett, 122 lower, and 3 unchanged.
Yeah, and that's reflected in the sector performances as well. When you look at the S&P 500 and its 24 industry groups, you have 21 sectors in the green, led by real estate investment trusts and banks. Both of those groups gaining more than 2%. Insurance, the other part of the financials group, also following up with a 1.4% advance. On the downside, the Netflix, the Meta, and Alphabet helping to drag media entertainment off by 1.5%. Energy has been a consistent loser today, off by 1.3%.
All right, so let's get to it, and let's talk about M&T Bank, because it finished pretty much at its best levels of the day. That means about a 7.8% gain. We know the results of reported earnings per share and net interest income that were ahead of analyst estimates for the first quarter. Firm also reporting deposits at the end period that missed the average analyst estimate, a key metric, but nonetheless, investors kind of, okay, we're okay with M&T Bank. Prometheus Biosciences, we know the story here, right? Merck striking up a deal to buy the biotech company, $10.8 billion or $200 in cash for the company per share. And that company, as we said, up almost 70%. It was a 75% premium to Prometheus's Friday close, so a little bit below that, but nonetheless, certainly an outperformance. And solar, once again, on our radar, if you will. We had a lot of analysts weighing in on the sector last week and moving it. So Enphase, number 2 gainer in the S&P 500, number 1 gainer in the NASDAQ 100. Piper Sandler coming out, upgrading its rating on the company. It makes solar energy equipment, citing a better than expected international trajectory. So upgrading to overweight, price target of $255. The stock right now closing at just below $225 a share, Jess.
Why do I always get the losers, Carol? So I'm gonna have to start off looking at State Street. So that's down about 9%. So it is its worst day since March of 2020. So 3 years, and this did come off the back of it reporting clients retreated from its investment products, and also we did see customers withdraw about $26 billion from its investment products. Another big name, looking at video game company Roblox, that's down about 12%. So that is its biggest loss since December. So what happened there was its bookings in March were weaker than expected. And it does expect average bookings per daily user to fall year over year. So seeing that stock pressured as well. And And of course, I have to go into and talk about what's happening with tech and growth. Looking at Alphabet, that's down about 3%, close to that, and it's the biggest loss in about 3 weeks. And that did come, and we've talked about this today. There was that report from the New York Times about how Samsung is discussing using Microsoft's Bing as the default search engine on its devices, just given its recent AI technology advancements, which would potentially replace Google. So that is a big move there when you're looking at Google.
Let's go into the yield space here. We really haven't talked about it much here, particularly when we got that Empire manufacturing data early this morning. You saw a flurry of activity in the Treasury futures market, a repricing, if you will, of Fed expectations. But we should point out this sell-off that we've been seeing in Treasuries has really been going on now for something like 8 or 9 sessions. You're now looking at a 2-year yield base up about 9 basis points on the day, back to around 4.1879 here. Similar moves on the other end of the curve here. Your 10-year yield up about 8 basis points, and your 30-year also up about 7.5 basis points here on the day.
Yeah, we're back to big moves again in yields, and I look at that 2-year yield and I think about how just in March alone, over the course of 3 weeks, the 2-year yield went as high as 5% and as low as 3.8%. How do you value stocks if you don't know where to value yields?
I think it's
yields, right?
No, that is the question right now, right? We don't really know ultimately. Just think about over the last week, you had the markets, talking about 2 rate cuts, and now we're back to what, maybe 1 rate cut or none. I mean, it's just interesting, and I think that's exactly it, Jess, in terms of if you're trying to figure out valuations when the market just kind of can't settle in on exactly what's next, especially when it comes to the Fed.
And looking beyond earnings, this is the last week we are going to get Fed speakers before next week is the blackout week before the Fed decision on the 2nd and 3rd of May. But I'm looking forward to a lot of the Fed speak. We are going to hear from Michelle Bowman tomorrow, but also we'll hear later this week Alston Goolsbee as well as Lisa Cook, who are voting members of the FOMC, and they have been giving some indications that they might potentially be more open to a pause at May. So I'm going to keep a close eye on those 2 Fed speakers later this week.
Well, I guess that's only if the data holds up here. When you look at the economic data we've gotten, and of course the economic data on tap here, and some of the estimates, whether it's in the housing market, whether it's some of those PMIs we get later in the week here, I don't know. I mean, the case is there. If they want to continue down this pace of rate hikes, the case is certainly there based on the data that they have the cover to do it.
Absolutely, and I believe JB Hunt has come out with earnings, according to our producer, and first quarter earnings per share missing analyst estimates. Earnings per share coming in at $1.89. Analysts were looking for more than $2 a share. Operating revenue also missing the mark, $3.23 billion. Analysts were looking for $3.4 billion as well. Dedicated revenue, $879 million. That was better than expected, but intermodal revenue was weaker, $1.54 billion versus the expected $1.63 billion.
I think it's interesting, too. I mean, we're going to dive into this a little bit deeper here, but there was some great reporting a little bit earlier looking at industry data when it comes to trucking prices and trucking capacity and how we're starting to see a little bit more of a normalization. Of course, that doesn't necessarily work in favor of JB Hunt when it comes to margins and profitability, but I think overall we talk about this whole supply chain getting back to something resembling pre-pandemic conditions. I guess there are a lot of folks out there that would actually take it.
Gosh, I love anything when you get to the transportation sector, right? The stuff of moving it around. And I guess when we look through these numbers, and I was just trying to go through the press release looking for some commentary by the executives, but this is the moving of things around. And I do think when we look through these numbers, how does it compare to where we were pre-pandemic, where we were from, in the pandemic when things were really distorted, and are we just getting back to normal, or should we be more worried about what this means? But the stock, which was little change really on the year, we're continuing to see it trade a little bit lower here in the aftermarket, just down about 1.4%.
I want to say one thing, though, too, about this earnings season, because, we were talking about this idea of the profit slump, which we saw the previous quarter, and we're certainly going to get that for Q1 if the estimates bear them out. So that earnings recession is there on an aggregate basis. But when you go on an individual basis, whether it's individual sectors or individual companies, it's much more of a mixed bag. And this is what I talk about when we talk about the strength of this economy and whether the Fed is going to actually feel compelled to provide that pivot that the market is pricing in. I mean, in order to have that pivot, you need some pain, and I'm just not seeing that pain, at least not on a broad-based level.
And when you're looking at the Dow transports this year, it's up about close to 7%, so a little bit in line where the S&P 500 is, but trying to give you a read there about the economy.
Have you seen the price of airline tickets?
It's crazy. They're supposed to stay at these levels.
I mean, there was a CEO that said they're having too much fun right now. That they're enjoying the fat profit margins that they have, and the demand has not fallen off at all.
That's the quiet part that they're not supposed to say
I
out
know.
loud.
Well,
but your point is taken.
Did I say that?
But to the other point, the other services, we've had these serious conversations. I know last week we were joking about Super Mario Brothers, but that had another just phenomenal week here at the box office. And there is sort of a lot of talk here that services are going to potentially see more of a rebound here, at least in certain pockets here. And so that weakness doesn't really materialize.
Right, but if we start to see unemployment tick up or inflation continue to stay rough, do people start to make choices again? And when, do we start to see people maybe not going to the movies or not,
How much does it cost for you to fill up your yacht right now? Has it gone down at all?
It's actually not that much for, when you sail, you use, canvas, so you don't use as much. It's the power boats that, like thousands of dollars.
You don't have a motor on that thing? You just take
We
it
do
out?
have a motor, but you use sail. It's a sailboat, so you sail.
There you go.
All right, we'll be back. I guess we're going to wrap on that. All right, everybody.
We don't have to.
You want us to stay? I don't think, I'm not so sure about our producers.
I want to go on this boat.
All right, yep, we're going to do a party, I think.
Join the club.
Not exactly
None
a
of us
booze
have
cruise, but all right, we will be back. That's a wrap, guys. Radio, TV, YouTube, and Bloomberg Originals. We'll see you again, same time, same place tomorrow.
It's not easy being green. Having to spend each day the color of the leaves. When I think it
All right,
might be
everybody,
nicer
a little Kermit for you, because
being
we are
red
talking
or
about
yellow
being green. We're going to talk about farming and growing greens, something this next company knows a lot about it. And I've got to say, we've been talking about this a lot here, Jess, on air. We recently caught up with the founder and CEO of the ag tech company Regrow, and a lot is going on when it comes to farming food and the ag space, which is really seeing some disruption and also growth in terms of the market size. So let's get into it with someone who's well-versed and embedded in the ag and farming space. We welcome Irving Fain, founder and CEO of Bowery Farming, which is backed by GV, formerly Google Ventures. He joins us via Zoom in New York City. Irving, I've been looking forward to having you on air. Welcome, and good to have you here. First of all, how should you think the world think about modern farming?
It's an important question, and I imagine at some point you all have talked about, we have a big and important farm bill that is coming up again quite soon. And so not only does the world need to be thinking about farming, but this country is very specifically thinking about farming. And one of the statistics that I think a lot of people always find surprising, or often find surprising, is that agriculture is actually the second largest source of global greenhouse gas emissions, right after the production of electricity and heat. So it actually accounts for a bigger slice of greenhouse gas emissions than the transportation sector, which you all were just talking about. And so when you think about what does modern farming need to look like, one of the critical recognition that we all need to have is there is no path to net zero. There is no path to decarbonization that doesn't lead directly through all of agriculture. And so the question you're asking is an extraordinarily important question for all of us to answer, not only in the next few years, but in the next few decades, as we need to transition to a more sustainable system that needs to feed a lot more people.
Are we doing it yet? I mean, I feel like you're involved in it. There's definitely pockets, but I also think about industrial farming. It's massive and controls a lot. So where are we in not only thinking about it, but doing something differently that's better for our world?
So massive it is, and changing a system that is as large and embedded as sort of broad-based industrial agriculture is not something that happens overnight. And I think you can just look towards the energy sector, the transportation sector, which are in many ways far ahead of where we are agriculturally, to see how long real transformational change takes. And, I think there's an interesting statistic that really answers your question more effectively than anything I can say, which is for every gigaton of CO2 that's generated annually by the combined global energy and transportation sectors, $51 billion was invested in low carbon energy transition in 2022. So for every gigaton of CO2 that was generated from energy and transportation, there was $51 billion spent for low carbon transition in 2022. At the same period, the transition to cleaner and more efficient agriculture got $2 billion of investment per every gigaton. So 25-time difference. And so are we moving? Yes, we're moving. And yes, there's a lot of innovation. There's a lot of excitement. But what is very clear is we're not moving as quickly and as aggressively enough as we really need to when you think about how substantial the food and agricultural ecosystem is for the entirety of the global population.
Irving, take a step back and talk to us more specifically about Bowery farming and specifically what your company does.
Absolutely. So really, our belief at Bowery is that wherever food is needed, we can grow it. And we do that by growing in warehouse scale, smart growing environments. We stack our crops from the floor all the way up to the ceiling. We grow under lights that mimic the spectrum of the sun, and we grow in a totally controlled and contained environment. So we can grow 365 days of the year, independent of weather, independent of seasonality. So it's reliable, consistent supply of pure produce year-round. On top of it, we grow completely pesticide-free and agrochemical-free food. And whereas in the field, that not only hurts your quality and productivity, in our case, first of all, our produce is really the purest expression of what you would imagine came out of your grandmother's garden. And it's 100 times more productive than a square foot of farmland, all the while using a very small fraction of water compared to traditional agriculture.
So your impact on the environment, the footprint much smaller. Forgive me for interrupting, but so
no, absolutely.
How does it compare? I'm just thinking for people who are listening. How does it compare from traditional in terms of the impact?
It is fractional. So 90% plus less water than traditional farming uses. No pesticides, no herbicides, no fungicides, no insecticides. And there's even more benefits beyond this because, number one, we locate our farms close to the actual points of consumption. So our product is harvested and delivered within 24 or 36 hours versus weeks of time in the traditional agricultural supply chain, and oftentimes even months. That means you're wasting less food, it's fresher when it shows up, and it's more nutritious. You also are reducing all the transportation miles that are required in today's existing supply chain. So in many respects, what we're doing is actually reinventing the fresh food supply chain. And we're building a supply chain it's simpler, it's safer, it has much more surety of supply, and it's a lot more sustainable than the existing system today.
How does this exactly reshape the food patterns if we're talking about either Gen Z or millennials?
In a number of ways, I think this is meeting consumers where they are and what they're looking for. So number one, what allows us to do what we do at Bowery is leveraging an enormous amount of technological innovation that's occurred over the last decade or so. We certainly leverage improvements in lighting and LEDs, but it's also leveraging artificial intelligence, computer vision, software, sensor and control systems, automation and robotics. It forms the intelligence layer across our farm and allows us to automate the entire process from when we plant the seed to when we harvest the product and put it into a package. And the reason that's important is it both allows us to be more sustainable, it allows the product to be safer, and it's using technology and smart and effective ways to produce a more sustainable system that we sell a product today at or below the cost of field-grown organic. And so consumers are looking for that sustainable solution. They're looking for technological solutions to age-old problems and systems that we've lived in, but they don't want those solutions to cause them to have to bend their lifestyles an excessive amount. And that's where and how we can use technology effectively to deliver the solution we do at Bowery.
We have about a minute left, Irving, then we're going to come back and continue. But and cost, remind us about cost differentials between what you guys are doing and what kind of the rest of the, or much of the ag space is doing. And again, got about a minute and then we'll come back.
We are selling at or below the cost of field-grown organic products today, and we sell across, we are the largest indoor vertical farming company in the U.S. now, 1,800 plus retail doors. We work with Amazon and Whole Foods and Walmart and Safeway, Albertsons and Ahold, so many of the grocery stores that you all shop and know.
All right, sit tight for a second. We're going to come back. So what we're seeing behind you, for those who are watching on YouTube and also our streaming service, Bloomberg Originals, 30 seconds, Irving, that's how you guys do it.
That's right. What you're seeing is our very first farm, actually, and each individual tray, which has a specific crop, which can have individual environmental controls and parameters, all driven by the Bowery operating system, which is a system that we've designed and developed for ourselves and for our farms.
All right, so we're going to come back to Irving Fain. He's founder and chief executive officer at Bowery Farming. He's joining us via Zoom from New York City, and I want to get into a little bit more too about, you talked about lightings and LEDs and packaging, because I think these are important components as we think about the consumer and what they want increasingly from the brands that they buy from. All right, you are listening and watching Bloomberg Business Week on this Monday. I'm Carol Massar along with Jess Menton. We're coming back with Irving Fain on the other side. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 421 on Wall Street. A turnaround for the U.S. stock market today. The Dow, the S&P, and NASDAQ all advanced. S&P overcame earlier losses and closed at the best level of the day today. S&P up 13. That was a gain of 0.3%. Dow Industrials up 100 points, also up by 0.3%. NASDAQ as well up 0.3%. The NASDAQ Composite Index today higher by 34 points. 10-year yield 3.60%. 2-year 4.19%. Spot gold $19.94 the ounce, back below 2,000. Gold today did decline by 0.5%. West Texas Intermediate crude down 1.8% today. WTI now at $80.99 a barrel. Sources tell Bloomberg life sciences company Danaher has stopped pursuing Catalent after expressing interest in buying the contract manufacturer. A deal between the two would have created a giant in bioprocessing or using living cells to create drugs or therapies. Today we saw Danaher up by 1.6%, and shares of Catalent Inc., Catalent down 1.9%. Again, recapping, late-day surge for the U.S. stock market with a gain for the S&P of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Jess Metten live here on Bloomberg Business Week on radio, on YouTube, and of course on our streaming service, Bloomberg Originals. We're chatting with Irving Fain. He's founder and chief executive officer of Barry Farming, still with us via Zoom from New York City. And Irving, I know I've had the benefit of talking with you earlier this year at this incredible dinner that you and your team hosted, and you brought together people from different walks of life, I feel like. And it was just a really rich conversation about what's going on in terms of food production, and how we think about wellness and the importance of food production in our wellness. So when you think about what's going on in the food space, it's going to require a lot of parties, right, in order to get it right.
Absolutely, and like any large-scale system that's global in nature and that in essence touches every person on the planet, the notion that there's a single silver bullet, a single industry, let alone a single company, is of course false and would never be the case. And so, again, not to point to the energy decarbonization and transition, but there are so many different companies and approaches that we're seeing play out in that space. And similarly, we are going to need many different ways to approach the new agricultural ecosystem. We're going to need lots of different solutions, and we're going to need to look at every aspect of the agricultural ecosystem as well. And we're talking today about farming and fresh food production, but equally we have to look very closely at animal agriculture and how that is transpiring and taking place. We need to look at food waste in general and how that's handled. We need to look at developing countries across the world and the way they're farming, their actual availability of not only capital but actual tools and the types of understanding that we have, and the access to equipment and to inputs and things that we have in the developing world that they may not have access to, which can raise yields. It is a large-scale problem that will need many people, lots of capital, and a lot of focus and attention in the coming decades.
Well, and what I wonder too, and I think this came up at the dinner that you guys hosted, is that when we talked about plant-based proteins, which haven't necessarily lived up to what we thought they were going to be, and they're 10 years, old and counting, whether it's Beyond, Impossible, and there are a lot of other players. Everybody was so excited, but it hasn't quite worked out how we thought. Is there going to still be, a really important role for plant-based protein in your view? Because I know you reach out and really are looking at things on a bigger level.
So, I don't, in some ways, there was a structural disadvantage that plant-based protein had, and you could argue whether or not they created this on their own, but this notion that they themselves and these set of companies were going to be able to displace the entirety or even a huge portion of the traditional meat industry, that's a really tall task. That's difficult, and more importantly, is it possible? Absolutely, but something like that will take time no matter what. And so what plant-based proteins absolutely have been able to do is they've shined the light and they've brought into the forefront the conversation about how animal agriculture is affecting the planet, how it's affecting our health. I mean, we spoke about this at that dinner, but the calorie calculation is about 10 calories in for 1 calorie out when it comes to meat. So if I said to you, Carol, hey, listen, I'm going to give you $1 and you give me $10, I think that would not be a trade that you would want to make. And that is essentially our current trade in the industrial agriculture system when it comes to meat. And plant-based proteins are helping people realize whether it's animal welfare, whether it's the environmental impact, and it's not just the animals themselves, it's all of the crops that we have to grow to feed the animals, many of which we grow in this country, and we end up sending overseas to support ecosystems in other countries and other regions.
Right.
There are better ways to do this. Plant-based proteins are shining a light on it, and what you're going to see now, in my view, is cell-based agriculture is really beginning to grow. It's beginning to take shape. It's very early stages, but it's the ability to essentially grow animal protein in a laboratory that is in many ways indistinguishable from an actual animal protein that comes from an animal. It just has a fractional environmental footprint and actually doesn't require the land, the feed, and everything else that we need today. Is this a next year solution?
Right.
Absolutely not. But is this coming? Absolutely.
Irving, having said that then, do you envision a world, and I don't know whether it's 5 years, 10 years, 20 years, where most of our food is produced inside, in labs, in gardens like you guys have, hydroponic, inside, because climate change is unstable and in terms of just productivity demands that we're going to have to be, making everything kind of inside?
So it's a great question, and I think it's worth just taking a step back for a second and realizing the problem that we are solving ultimately is that the world around us, and particularly our climate, is becoming increasingly unreliable and unstable. And all you have to do is look at what's happening on the west coast of the U.S. right now. We were talking about the 1,200-year mega drought in California and the southwest of the U.S., which still very much is present, had very real impacts on agricultural output over the past few years. Now, over this winter, we had these atmospheric river events, and we have record snowpack in the Sierras, and we've gone from heavy drought conditions to enormous flooding in the fields of the Central Valley, where the majority of our food, our fresh food, comes from over the course of the next 6 to 8 months. It is a different problem and a different extreme on the other side of the spectrum. And meteorologists and experts in this area say, we're not done with the drought. That will be back. And so this increasing amount of unreliable and uncertainty is going to demand that we put systems in place that can actually much more effectively hedge against that. What we're doing at Bowery in indoor agriculture is absolutely important and will be a very large part of the agricultural ecosystem moving forward. But I would never tell you that all food will be grown indoors. It is too large of an industry. It is too broad. We're talking about a global industry, a global problem, and there is places for outdoor agriculture, indoor agriculture, traditional animal proteins, cell-based proteins, plant-based meat. This is a many lead bullets and no silver bullet problem without question.
So is it easier to do this as a private company, or is it make more sense to go public?
I think what's exciting about what we're doing is food, and the opportunity that we're going after is enormous, and it's durable, and irrespective of what's going on cyclically in an economy, people need to eat, and this is important. And when we look at our opportunity just for crops that are good candidates for us at Bowery, it's $1 trillion plus a year global opportunity. So there is an enormous amount of room to grow still. We are fractional compared to the opportunity in front of us. And so right now, as a private company, investing in innovation, investing in the foundational technology that we need to develop to do this effectively is the right decision for us. But you can absolutely see what we're doing at Bowery as a standalone public business at some point.
Hey, one thing I'm thinking about, we're getting ready to head out to Milken, and they are, the Milken Global Institute, their annual big event. And it really is this cross-section between finance and wellness. And they often, I've moderated panels out there about food and food production in particular. Is the money flowing in to where it kind of needs to do to get to a food system that we're going to need in the future, that is better for the environment, that is much more productive and also healthier?
I think this points to the stat I mentioned earlier. Like, is there money flowing? Absolutely. But when you think about the fact that 25 times more investment is going towards, in 2022, energy and transportation decarbonization, and yet agriculture is the second largest contributor to greenhouse gas by a very not far behind. That 25 times delta, to me, doesn't speak to a recognition and acknowledgement of the urgency and size of the opportunity in front of us.
What's holding it back? 30 seconds, Irving. Do we need like an Elon Musk to just kind of rip off the Band-Aid? What do we need?
Strangely, we all interact with the food system every single day of our lives, yet I'm often amazed at it. Just people don't know a lot about what's underneath the products we buy. We go into the grocery store, we pick something off the shelf. I mean, you think about early COVID when we were all shocked that our grocery store shelves were empty because we'd taken for granted that when we needed a product, it would be there. But in fact, it's this long, complicated global supply chain that allows that to be a reality. And so people are beginning to understand really what allows our food system and our agricultural ecosystem to exist in the way that it does. But increased knowledge and increased awareness and increased understanding will only lead to more investment, more entrepreneurs focusing on the problem, and the returns are there. They're about that.
Well, so glad we got to catch up, and I look forward to next time already. Irving Fain, founder and chief executive officer of Barry Farming, joining us via Zoom from New York City. You are listening and watching Bloomberg Radio. All right, let's get back to world and national news. Nancy Lyons, she's in our Bloomberg 99.1 newsroom in the nation's capital. Hey, Nance.
Thanks, Carol. House Speaker Kevin McCarthy says a debt ceiling increase without spending cuts will not make it through Congress. While speaking from the New York Stock Exchange today, McCarthy said Republicans will vote on their plan to raise the debt limit in the coming weeks.
The no strings attached debt limit increase will not pass. But since the president continues to hide, House Republicans will take action.
McCarthy says House Republicans will call for reducing federal spending to 2022 levels and limiting the growth of spending over the next decade to 1%. President Biden says he wants to see a GOP budget before beginning any negotiations. Time is running out for individuals who still need to file their federal taxes. The IRS deadline for filing 2022 returns is tomorrow. Those who have not submitted forms can request an extension, delaying the deadline for paperwork until October 16th, but the extension does not apply to the payments owed. Supreme Court Justice Clarence Thomas plans to amend his financial disclosure forms. Bloomberg's Nathan Hager reports.
The political and ethical pressure is building on Justice Thomas after ProPublica reported last week that he failed to disclose a 2014 real estate deal with Republican mega donor Harlan Crow. A source tells CNN Thomas didn't think he needed to report the sale of 3 of his properties in Georgia because he lost money on the deal. Thomas has already been under fire over his links to Harlan Crow for failing to report decades of luxury travel he received from the Texas billionaire. Thomas has said he considered that hospitality from a longtime friend. In Washington, I'm Nathan Hager, Bloomberg Radio.
A grand jury has voted not to indict 8 Ohio police officers who fired dozens of rounds at Jalen Walker after a car and foot chase that ended in the 25-year-old black man being shot to death. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. Move higher for stocks today. We do check markets all day long here at Bloomberg. In fact, we finished at the best level of the day. S&P up 13 to 4151. We had the Dow today up 100 points. That was a gain of 0.3%. S&P, by the way, up 0.3. NASDAQ also higher today by 0.3%. NASDAQ up 34 points to 12,157. 10-year yield 3.60%, with the 2-year 4.20%. Small move, though, bottom line for the S&P, as the possibility of further Federal Reserve policy tightening lifted Treasury yields, and investors stayed on the sidelines amid bank earnings. Well, as for the overall market backdrop, Doug Sioka is with Kavar Capital, and he was our guest right here on Bloomberg Business Week.
This year, even though we know the Fed may have one more hike and maybe they won't cut as much as the market's been pricing in, I think there is a bit of complacency that's setting in. But I think more than anything, it's just that an exhaustion with the type of intraday trading activity that had become the norm throughout 2022.
Spot gold down $8 the ounce to $19.95, drop there of 0.4%. West Texas Intermediate crude today down 1.9%. WTI 80.98 a barrel. Netflix is apologizing after its service buckled under the strain of the popularity of a live-streamed reunion episode of the dating reality show Love is Blind. Today, we did see Netflix shares decline by 1.75%. Recapping, stocks higher, S&P up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Appreciate that update. Carol Master along with Jess Manton live in our Bloomberg Interactive Broker studio on YouTube on Bloomberg Originals. Hey, here's some data points for everybody. According to the latest estimates, nearly 329 million terabytes of data are created each day. It's a lot. And no doubt about it, Jess, we're living in a data-centric world. We get that. We talk about it constantly. We talk about retail using it, to learn more about us and our buying habits. We talk about, all the search giants. They use it in terms of advertising, right? It is kind of everywhere.
It does. It follows us and obviously our different types of patterns, so you can't really escape it at this point, Carol.
No, and it can be put to really good use when it comes to maybe creating better software, and we know that. And so that's where our next guest comes in, whose company just raised $50 million in a Series D funding. So let's get to it. Christine Yen is co-founder and CEO of Honeycomb. She joins us via Zoom from Reno, Nevada. I always say Nevada wrong, and I always have all my friends, Christine, yelling at me, like, don't you know how to say it? And so instead I scrubbed Reno. I can't believe that. Welcome. How are you?
I'm excellent. Happy Monday. How are you?
Happy Monday. I'm doing okay, too. Tell us about your company and how, kind of tapping into your time at Facebook specifically maybe helped you create, I feel like, almost a Facebook for tech engineers to kind of work together and create better code. So talk to us about it.
Yeah. In a nutshell, my co-founder and I met actually at a company before Facebook, and we were two engineers on opposite sides of sort of the spectrum of engineering, if that makes sense. Yeah. She was very focused on back-end infrastructure. I was building our analytics product. And, this company that we were employees at was building this very complex software system. We, being the engineer supporting that, had to all the time figure out what was going on, why our software was not behaving the way that we expected. When smaller companies get bought by bigger companies, it's common for the bigger company to push all the big company tools on a smaller company and say, here are the big kid toys. And for the most part, we were skeptical that what Facebook built for Facebook would make sense for our system. But there was this one tool that sort of shed all of the typical patterns that we'd seen in how tools can work with data to help engineering teams make sense of why is the software misbehaving. And despite being skeptics to begin with, we found that this internal tool changed how we thought about software, changed how we thought about what it meant for code to go live. And when each of us were thinking about leaving Facebook, we both had this thought of, I don't want to have to do that thing again without this internal tool. And so really what brought us together is wanting to bring this tool to the masses through the lens of folks who are skeptical about it to begin with.
So how does the tool actually work?
Well, with any of these data tools, we take in massive amounts of data, and really, in the end, we allow users to ask questions of that data. What's special about this particular this problem space, and then I'll talk about the tool, is that some of the examples of data use that you described in the lead into this segment are all, on the business side. They are all assuming that the software is doing what the software does. That if you click checkout on your shopping cart, that you actually, you're able to check out with that item. Our software is intended more for the software engineering teams who are on the hook when you click checkout and you can't actually check out with your purchase. When that happens, the engineering teams go, oh no, what assumptions did we make that were wrong? Did we have a logical error somewhere? Is the person, is it not actually a person clicking checkout? Is it a bot? Is it behaving correctly in not letting the bot check out? All of these questions rely on a massive amount of data, as you touched on, but really quick response times. If you're an e-commerce site not able to let your customers check out, those are real dollars flying out the window, and speed really matters.
So this tool brings people together, engineers specifically, right? Okay, there's a bug or something, or I can't check out. Oh my God, Carol's gonna be really ticked off, but we gotta fix this. You know what I mean? So that's what your tool does, right?
Exactly.
And what does this mean exactly for the growth in your business? How's it spurred more of that?
Well, one of the things that seems to always be true with engineers is we want to build bigger and better things. And as new technologies come out, we want to play with these new technologies. And many of the recent changes in our software space have made the systems that we've built more complicated. And when the building blocks that you're using are more complicated, the tools that you use, like Honeycomb, to make sense of are these building blocks put together in the right way, also need to be, I'll say, more flexible to manage that complexity. And so, we've all seen the world is moving online. As a consumer, I know my expectations of, how fast and reliable a piece of software have increased. That shifts a lot of the expectations onto these engineering teams that need to ensure that their software is behaving in the face of all of this increased complexity and increased expectations.
Christine, you guys shared some numbers. Momentum in 2022 achieved another consecutive year of 2 times revenue growth, drove over 160% net revenue retention for 600 plus customers globally. Has generative AI changed that? Are you even in more demand? Because this is complicated stuff and you're gonna need those engineers really working together. And just got about a minute or so left.
Short answer is yes. I think that we're just on the cusp. We haven't seen, right now engineering teams everywhere are thinking about how to incorporate generative AI, but absolutely, anytime you incorporate a black box into your system, the AI is making decisions. Engineering teams the humans are going to be on the hook to figure out why they made those decisions and whether those are the right things. So absolutely, I think that this space has only just begun.
So your space of this observability, which I'd never heard of, this concept, how was that thing or not when you create, that is going to be something even more important in this more kind of complicated AI space. And I'm just curious, does that mean you are already seeing more demand for your products? And just got about 30, 40 seconds.
I think the demand for our products is correlated with just general interest in cloud.
Okay.
Generative AI absolutely is increasing, cloud commitments and cloud spend across the board, but it's still early. And absolutely, I think that there's a lot of exciting times ahead of us.
No, it makes sense. And in terms of a space where these guys can work, or these, women, men, everybody kind of work together on a program really makes sense. Christine, very cool. Christine Yan, Chief Executive Officer, co-founder of Honeycomb, joining us from Reno, Nevada by Zoom. But I just do think about all these companies, right, that are going to make it better and easier for people to work together on a program, a software, a code.
I know, and basically just the whole thought process about providing these engineers with these tools to help really identify the data, and that right there I feel like is a huge key for them.
All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Master along with Jess Metton, and this is Bloomberg Radio.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Peloton. An update for stocks. We saw shares of Boston-based State Street plunge today. That stock declined by roughly 9.2% after the custody bank reported clients retreated from its investment products. Charles Schwab shares rallied today after results came in better than feared. And with more on that story, here's Bloomberg's Steve Rappaport.
Charlie Schwab is also halting share repurchases amid the worst U.S. banking crisis since 2008. Schwab said customer deposits declined to $325.7 billion as of March 31st, roughly in line with analyst estimates. They fell 11% since the end of last year and 30% from the same period a year ago. The firm cited, quote, regulatory uncertainty for its decision to pause stock buybacks following the collapse last month of 3 U.S. lenders, including Silicon Valley Bank and Signature Bank. Customers continued to add money to Schwab investment products. Core net new assets totaled $132 billion, including $53 billion in March alone, the second most ever for that month. Charlie?
And that's Steve Rappaport reporting after beginning the day lower. Schwab shares ended the day with a gain of 3.9%. Morgan Stanley analysts say BlackRock's assets under management are set to exceed $15 trillion in 5 years' time, with the broker predicting that fixed income and cash management will help propel the investment manager's growth. Today, we saw BlackRock shares rally by 1%. And those are some of the company stories that we're following for you at this hour. I'm Charlie Peloton. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, this is Jess Mitten and Carol Masser back. Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Nancy.
Thanks, Jess. The Republican-led House Judiciary Committee today targeted Manhattan District Attorney Alvin Bragg during a field hearing in New York City. This happened just weeks after Bragg indicted former President Trump. Committee Chairman Jim Jordan says Bragg is ignoring the real criminals, even though the city's crime rate is substantially below the U.S. average.
Rather than enforcing the law, the DA is using his office to do the bidding of left-wing campaign funders.
Democratic Congressman Jerry Nadler says the whole hearing was an intimidation tactic.
Jim Jordan and his Republican accomplices are acting as an extension of the Trump defense team, trying to intimidate and deter the duly elected district attorney of Manhattan from doing the work his constituents elected him to do.
Alvin Bragg was not invited to attend today's hearing. House Speaker Kevin McCarthy is pledging to pass legislation to raise the nation's debt ceiling, but on condition of capping future federal spending at 1%.
Without exaggeration, American debt is a ticking time bomb that will detonate unless we take serious, responsible action.
Speaker McCarthy gave his speech at the New York Stock Exchange. President Biden says Congress needs to pass legislation that raises the debt limit without any other conditions. The $1.6 billion defamation trial against Fox News will proceed tomorrow with jury selection. It was thought that a delay in the trial today meant that a settlement was in the works, but the judge this morning announced the trial is on for now. April 26th is the next earliest launch date for SpaceX to try again to launch its nearly 400-foot rocket Deep Space Starship. Today's launch was called off because of a problem with the first stage booster. The company plans to use Starship to send astronauts and cargo to the moon and ultimately Mars. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Carol.
All right, Nance, thank you so much. You ready to go to Mars, Jess?
I want to go.
Do you? Are you ready? I think they have figured out maybe how to get there, but it's that return trip, right?
Yeah.
Do they have enough fuel to get us back
I find it highly unlikely that I'll ever be able to make that trip myself, though, Carol.
All right, well, we wait for that. In the meantime, one thing we know for certain is a story that's among our most read. More than a quarter of Americans have no money saved for retirement. This is a new survey from personal finance site Credit Karma, which found older respondents are even less prepared for some measures than their younger counterparts. Nearly 1 in 5 people aged 59 and older say they didn't have a retirement account, and 27% of respondents said they haven't yet set aside anything for their later years. That compared to a quarter of Gen X respondents. That's pretty depressing.
What strikes me, Carol, is when I covered personal finance, I would always see very similar stats